Let's take a look at the Chapter 1 learning objectives. There's 9 of them. Identify the major financial statements and other means of financial reporting. Explain how accounting assists in the efficient use of scarce resources. Describe some of the challenges facing accounting. List the objectives of financial reporting. Explain the need for accounting standards. Identify the major policy-setting bodies and their role in the standard-setting process. Explain the meaning of general accepted accounting principles. Describe the impact of user groups on the standard setting process, and understand issues related to ethics and financial accounting. Okay, let's explore some of those. Financial accounting and accounting standards. Okay, it consists of sort of 4 areas: financial statements and financial reporting, and bullet points underneath that include accounting and capital allocation. There's challenges, there's objectives, there's a need to develop standards. There are parties involved in standard setting of financial accounting: the SEC, the AICPA, the FASB, even the GASB, the Government Accounting Standards Boards, and also we're seeing a changing role of the AICPA. Then we get to the idea of GAAP, Generally Accepted Accounting Principles, and we look at issues in financial reporting which involve considering the political environment, the expectations gap, the role of international accounting standards, and ethics. All right. Under the heading of characteristics of accounting, I'm going to point out that essential characteristics of accounting include the identification, the measurement, and communication of financial information about economic parties, about economic entities to interested parties. Now, we also have 3 other concepts: the economic entity, the financial statements, and additional informations. Okay, we take a look at identifying and measuring and communicating information about the economic identity, and we do that by producing financial statements. And we've got 4 of them listed in the middle here: the balance sheet, the income statement, the statement of cash flow, the statement of owners or stockholders' equity. But we also have to consider that the notes to the financial statements are an integral part of the financial statements. And those are considered GAAP, Generally Accepted Accounting Principles. There is other information that's often provided, such as the President's letter and prospectuses, but that is not covered by GAAP. All right, so a quick review of the characteristics of accounting. What's the purpose of information presented in the notes to the financial statements? And our choices are to provide disclosures required by GAAP, to correct improper presentation in the financial statements, to provide recognition of amounts not included in the totals appearing in financial statements, or to present management's responses to auditor comments. And the correct answer is A. It's to provide disclosure required by generally accepted accounting principles. So think of the notes as being very much involved with the principle of adequate disclosure. All right, let's talk about accounting and capital allocation. In all businesses, resources are assumed to be limited, and I think that's a fair statement. The efficient use of resources often determines which businesses do well and which do not. Okay, so financial reporting provides information to help users about the proper allocation of capital between competing opportunities, is the way I'd like to think of it. Okay, the users involved are investors, creditors, and others, and capital allocation is the process of how we determine who gets access to those scarce resources, what money goes to fund which projects. I think that says it fairly well. Okay, so with regard to accounting and capital allocation, we'll take a quick review. An effective process of capital allocation is critical to a healthy economy which promotes productivity, encourages innovation, provides an efficient and liquid market for buying and selling securities, or all of the above. And hopefully you recognize that all of these are the correct response. All right, we have some challenges facing financial accounting in the areas of non-financial measurements, forward-looking information, soft assets, and timeliness. All right, financial reporting should provide information that's useful to present to present and potential investors and creditors and others so that they can make rational investment credit and similar decisions. Okay, the financial reporting information should also help present and potential investors and creditors in assessing the amounts, timing, and uncertainties of prospective cash receipts. So Part B is concerned with cash flow. Part C says financial reporting should provide information about the economic resources of an enterprise, the claims to those resources, and the effects of transactions, events, and circumstances that change its resources and claims to those resources. All right, so to review, all of the following objectives of financial reporting except to provide information, A, about enterprise resources, claims to those resources and changes in them, B, that is useful in investment and credit decisions, C, about the management and major shareholders of an enterprise, and D, that is useful in assessing cash flow prospects. Okay, and the only one that wasn't covered was information about the management and major shareholders of an enterprise. That's not one of the objectives of financial accounting. All right, let's talk a little bit about the need to develop standards. There's various users that need financial information. We talked before about the 4 basic financial statements and the notes that are a part of them, and generally accepted accounting principles helps us drive the financial statements, and the accounting profession is very much involved in setting standards that become GAAP to help indicate what needs to be disclosed on financial statements that are used for external reporting purposes. Keep in mind, for internal reporting purposes, a company is free to do whatever it likes. All right, there's some parties involved in standard setting. The SEC, the AICPA, the FASB, as well as the GASB. Okay, the SEC was established by the federal and government. It largely came out of what occurred in U.S. history in 1933 and 34 with the fall of the stock market, the Great Crash. The Securities and Exchange Commission encouraged private standard-setting body, and it also requires some public companies to adhere to GAAP. That's a requirement of the SEC, and those that must comply are any companies that have their stocks listed on any of the U.S. exchanges. SEC certainly provides some oversight, and it's considered the enforcement authority. Now, the AICPA is a national professional organization, and it establishes a Committee on Accounting Procedures, and it also established the APB, or the Accounting Principles Board. Okay, the Committee on Accounting Procedures existed from 39 to 59, and they issued ARBs, Accounting Research Bulletins. And it was a problem-by-problem approach that didn't work all that well. And then in 1959, they established the APB, which issued 31 opinions, the APB opinions, and then the Wheat Committee made a recommendation in 1973 that caused some changes at that point. From that point forward, we had the FASB, the Financial Accounting Standards Board, and which came out of the Wheat Committee's work. Let's see, we have the Financial Accounting Foundation, which created the FASB, and there's also a Financial Accounting Standards Advisory Council. So there's some details involved with the FASB. The Financial Accounting Foundation selects the member of the FASB, and it exercises general oversight. It funds their activities. The FASB's mission is to establish improved standards of financial accounting reporting, and the Advisory Council gets in consultations on major policy issues. All right, so the mission was to establish and improve standards of financial accounting and reporting, but there were some differences between the FASB and the APB, involving smaller membership, full-time paid membership, greater autonomy, increased independence, and broader representation. And if you want more on it, you can go visit the FASB at www.fasb.org. All right, so let's review. The first step taken in the establishment of a typical FASB statement is A. The board conducts research and analysis and a discussion memorandum is issued. B. A public hearing on the proposed standard is held. C. The board evaluates the research and public response and issues an exposure draft. Or D. Topics are identified and placed on the board's agenda. And the first step that the FASB does is it determines its agenda. Okay, FASB relies on two basic promises, and this falls under the heading of due process. It's responsive to the entire economic community, and it operates in full view of the public. So, topics are placed on agenda, research is conducted, and a discussion memorandum is issued. Then there's a public hearing. Then the board evaluates research, public response, and issues an exposure draft. And step 5, the board evaluates responses and issues final statements of financial accounting standards. Now, what we do see from this slide is that the last slide of the review is out of order, and I apologize for that. I didn't catch that as I reviewed these. All right, there's various types of pronouncements issued by the FASB: standards, interpretations, and staff positions, financial accounting concepts, and then there's the emerging issues task force statements. As we move over to the Government Accounting Standard Board, the GASB was set up in 1984 to address state and local governmental reporting issues. Okay, so the Financial Accounting Foundation has FASB on one side and GASB on the other. Let's talk a bit about generally accepted accounting principles. These principles have substantial authoritative support, and major sources of GAAP come from the FASB standards, interpretations, and the staff positions. Also from the earlier APB opinions are also considered GAAP, and also the AICPA accounting research bulletins. Okay, so under the topic of a house of GAAP, we have all of these areas. And Category D are considered the least authoritative, Category A the most authoritative. So the FASB statements, the APB opinions, the CAP accounting research bulletins, and then Category B deals with some technical bulletins that are still considered GAAP. And then finally we move into the EITF areas, the AICPA's ACSEC practice bulletins, and we also have these three areas on top: accounting interpretations, implementation guides, and recognized industry practices. All of that is considered GAAP. So we've got quite a lot of authoritative pronouncements to consider for external reporting purposes. Okay, so a quick review. Which of the following accounting pronouncements is considered the most authoritative? The Statement of Financial Accounting Concepts, the technical bulletins, the APB opinions, or the statement of position. And hopefully from the last slide you recalled that APB appeared on the bottom, having substantial or a high level of authoritativeness. All right, let's talk a little bit about issues in financial accounting. The standard setting is done in a political environment. Accounting standards are as much a product of the political action as they are of careful logic and empirical findings. And I believe this is our last slide. The standard setting process, you can think of all of these impacts on the FASB. Business entities offer their impact. CPAs and the accounting firms offer their insights and their views. The AICPA is involved. We've got the folks in academia to offer their insights. The investing public has a concern and an interest in the FASB's work, as well as the financial community, preparers, governments, and industry associations. Okay, so a review. All those who serve on the FASB must be certified public accountants, and that's a false statement. I guess we do have a little bit more. Issues in financial reporting. There's an expectations gap. What the public thinks accountants should do versus what accountants think they can do. And it's difficult to close this expectation gap. And the SOX Act, or Sarbanes-Oxley of 2002, attempted to address it. And now we have the Public Company Accounting Oversight Board as well. Also, another issue is the role of international accounting standards. And that's the idea that there are two sets of standards out there. There's the U.S. GAAP issued by the FASB, and then there's the International Financial Reporting Standards issued by the AISB. And both are considered global leaders, right? And both have recognized that the global markets will best be served if we have only one set of generally accepted accounting principles in place. So there is an effort in place to bring those two authoritative bodies of knowledge into a movement into just one set of GAAP. We also have ethics in the environment of financial accounting. In accounting, we frequently encounter ethical dilemmas. GAAP doesn't always give you the right answer, and doing the right thing isn't always easy or obvious, particularly if, in my opinion, if your employment is based on the actions and the threat comes from above.